stream marker, and try and get anything out there. Anything at this stage, anything will do. Anything will do at this stage, I think. Hi friends, Solana, Sol USDT, Sol SOL. Is it Solana that it stands for? I think it is, right? Sol. That's what we're looking at right now. A couple of key areas for us. We can see the 236 Fibonacci's coming in here at $12.86. If we were to see a retrace down to this area and break it, we'd be breaking market structure. So that's one thing we'd break, our previous low. The other thing we'd be breaking as well as the Fibonacci points. So that's 2 for 1 that we'd be breaking. And then I would expect, I suppose, to use that word loosely, a move to go down, perhaps taking us down as low as 320, maybe finding support at 535 along the way. But of course, this is extreme. And what we're looking at is, of course, a very, very positive trend towards the top side. So that's like the negative story out of the way already. Let me talk about the positive aspects of this thing. And I'm going to do it by bringing in a Fibonacci from that top to this low here and pointing out the fact that the 1618 lines up with that 236. And that's interesting and useful and good and good to know. But what we're actually seeing as well is that the high on this one, the sort of the next area up, if you're going to push past the 1618, going up towards that 2.24 is in there at 35, and that's going to be your next profit taking target from where we are right now, or one of anyway. So let me just see if I can establish a couple more reasons for that without those Fibonacci's on those particular Fibonacci's on the chart just there. Have we got a 1618 that operates, anywhere in around that region from here? That's where we're at right now, the 2.24. It lines up with the other 2.24, so that's definitely right. Somewhere between 33 and 35 really overall is where the sort of the harmonics, if you like, of the market. Not talking about Carney's, Gartley, etc. I'm talking about just the dynamics of money flow in markets and the way that supply and demand really works. So yeah, that, right? So what else can we look at for this coin to kind of get some ideas? Perhaps the Ichimoku cloud will give us an idea of where we might find some future resistance or support. And what we're seeing, of course, is that really it's looking at the current price action and shoving it off to the future. So there's not a great deal when you're looking at a heavily trending market that you can learn from the Ichimoku cloud in terms of where we might find support at. But we do know that if this area right here means anything, then it means three things now: the 236, the current market structure that we talked about already, and of course the Ichimoku cloud area. So if we did see a pullback, I'd want to see a bounce, then I'd really kind of need to see a bounce in about that $15 target. Okay, so that would be $15 would be my target towards the downside. Maybe having got three possible sort of things in here, it makes it worthwhile propping an extra line on there. Let's hide the Ichimoku cloud, take a look at a couple of different things as well. We're still on the 24-hour time frame, so we're doing it from a broad perspective. Let's see, what does TradingView think the Fibonacci's say? Not a lot of lessons from TradingView just there. That's its own particular TradingView idea there. Let's drop on, shall we drop on the TD sequential? How high have we got so far? Have we got as far as a 9? We have indeed. We even saw a little bit of an inflection at that point. Now we're pushing past it. Interesting stuff. But if we saw a pullback from these regions, wouldn't be a surprise from a TD sequential point of view. Are we therefore able to look for a 13 anywhere? Do we have a 13 anywhere else on this one? Not seeing it on the 24-hour time frame. Anyway, cool. So we'll get rid of that one for now. So we could see the potential for pullback in this region because we've had the 9 already coming in there. That's interesting. Are we obviously in terms of fractals? Yeah, we've got a fractal just there as well in terms of Ichimoku, or no, in terms of Williams fractals. Yeah, we're still pushing on past, managing to get some decent things. What we really want to see, if we want to keep this going, by the way, over the short period of time, or over the near-term future, sorry, is what I mean, is to continually be breaking the wicks of the previous wicks with our bodies, okay? We had a wick here. Nothing in terms of wicks made a difference. It was this wick here made no difference. Body breaking it, that started to make, the body here actually was just shy of it. Wick didn't do it. It was the body afterwards. This is where we got the follow through at. You can see a little bit of inflection here, but it became support resistance. This was where we pushed through. Then again, we pushing through. So I want to see us pushing through constantly. So that means that current situation stands, start to get a little bit kind of worried in a sense if this turns into a doji candle here, drawing down below the $25 period, having had a 9 on the TD sequential and daily time frame, with the potential for us to look down the way. We could even be looking down to just $20 in terms of the middle of the Donchian channels there as an example. Maybe I should try to wrap this up in terms of the daily time frame by taking a look at everybody's best friend, the Bollinger Bands, and showing that we're tracing this up the way, and it's doing a really good job. It's really, really strong, good upward trend. That's kind of what we've been getting at this whole time. We just need to see this continue. If we start taking out this candle, or previous day's candle, and especially if we take out this sort of little market structure. Oh, I just disappeared. That's cool. I don't need me on the charts if my camera battery is going to run out. So hide. Whoa, can't hide that. Hide my face though. There we go. That'll do. So yeah, so cool. Just finishing up here then and saying, yeah, and that this is strength trend moving towards the top side. Very, very good. Nice to see it. I'm happy to have seen this all happen as it has been happening so far. If we continue to trace that up the way, very, very good. But in terms of the lower term timeframes, is there anything then perhaps that we could find which is showing us that maybe we're getting into a toppy area perhaps at all? Let's see. Divergence, yes. Divergence, yes. Divergence, yes. Divergence, yes. So basically divergence all around. Have we got hidden bullish divergence? So yeah, we've got a bit of the old hidden bullish divergence. That's good to see on the MACD, not on the RSI. Not on the DMI. Yeah, on the stochastics as well, we had a bit of the old hidden bullish divergence. Did we? Yeah. So so that's good, and that's taken us up so high so far. So that's great. You want to be riding this up the way. Perhaps for a lot of people, what they need to look towards, perhaps in terms of managing their positions, is something like the parabolic SAR. Really, don't. I've heard some people talk about this disparagingly in the sense that I heard somebody say recently, "Oh, I used to trade. I was so bad. All I used to do was do this and use the parabolic SAR." Well, my goodness, don't. Somebody's looking back at their past and they used this. If they were using it correctly, then there's no problems. You know, they shouldn't be disparaging themselves. So if you use this right now, then don't feel like you're doing anything too basic. It really isn't. You could be looking here and saying that you'd be happy enough to take profits in any of these regions so that you don't have to suffer the question marks that come in as we try any sort of pullback. You know, and that currently is lining up in the 4-hour time frame at $22. But in terms of the daily time frame, it's lining up at, yeah, around about that $20 area. And that, of course, as well is lining up with the middle line of the Donchian channels, bringing us in for a 50% perhaps retrace between the lows and the highs if we were to have one. So that would say my sort of, if we're going to remain ultra bullish on this thing, then what I'm looking for is for the prices to operate somewhere above the 50%. And if they had to come to the 618, okay, but that's of course not something you're going to hang on to. Above the 50% Fibonacci retracement from its previous low to its high overall on this daily time frame. Not divergent, not divergent, because there's no lows in here, so you can't say that. So overall, we're doing okay in terms of this little thrust up the way, because, well, there's no lows really to make the comparison from, so that's flattering to deceive somewhat. But then looking at our highs here versus our previous highs, and yes, it is divergent. Doesn't mean we can't go on any further, but if we did push up here, I'd be definitely taking profits at 35, so you've been warned. Thanks very much for tuning in. I'll catch you in the next episode. Like I said at the start of this, likes and subscribes really do help. If actually, no, I don't know if I did say that. Please hit like. I would really appreciate it.